Well, good morning, Southern Oregon, and welcome to the Real Estate Show. Pete Bill Castro is my co-host. I'm Alice Lima. We're both brokers here at John L. Scott in Southern Oregon. And welcome to the one and only weekly real estate show in Southern Oregon. And what a week we've had, Pete. Oh my gosh.
Well, we survived the 4th of July. We've got fires around us. We've got water issues galore out there that are affecting so many people. It's such a strange market, and yet, Alice, things are selling immensely well. It has not changed since the pandemic began about April of last year. We saw that begin, and nothing has really slowed down since then.
But we're finally getting more listings on the market. Yay.
We're getting more. There were 360 single-family residents for sale in Jackson County last week. 360. We were down to 200 a few months ago. Okay, so we've definitely improved there. And of those 360, 86 of those are luxury properties. 233 of that 360 are $500,000 priced and above. They're selling, all categories are selling, including some luxury homes. We had sold 5 of them last week, sold, and 7 of them went pending. And 12 more came on the market. Just anyway.
12 more. Well, see, and that's a real buyer's market. If you're getting 12 of those on at the same time in 1 week in one county, oh my gosh, that's a buyer's market.
We're going to talk with Guy Giles today from Mutual of Omaha Mortgage about interest rates, because how are they affecting what's going on? Can you still afford to buy a $500,000-$600,000 home when maybe you couldn't before? So are interest rates rising, or are they staying, or what's going on? We're going to get the information from him. But look, Alice, everything's selling. Vacant land is big right now. Some of the issues around rural properties and water are not resolved, and
we're getting multiple offers on some of our 55 in-park mobile homes, right?
Well, they're because there is no inventory in lower priced areas. Look, if 350,000 was kind of that price that we always used to say, above or below that, and below that, they're selling as fast as they come on the market. 2 days, 4 days, 5 days, 3 days. It's amazing how fast a lot of that's going on. So as a buyer, you got to be ready. That's what we're going to talk with Guy about, because if you're not, then you're really just chasing a pipe dream, and you're never going to be successful. So a lot going on in the market. Look forward to talking about it today with Guy.
And we're our show is brought to you by Rogue Valley Association Realtors, John L. Scott here in Southern Oregon, and Guy Giles, Mutual of Omaha Mortgage. We'll be right back. Do not touch that dial. Welcome back, real estate fans. Alice Lima here with Pete Bill Castro. We're both brokers, John L. Scott here in Southern Oregon. And welcome back to the Real Estate Show. Today, we get to talk to Guy Giles of Mutual of Omaha Mortgage, one of our sponsors. Welcome back, Guy.
Hey. Thank you very much. I'm glad to be back, and well, out of the heat today anyway. It's been going crazy again this summer with work and just kind of smoke, and I don't know. I'm just ready for fall, I think, at this point.
I think everybody's ready, Guy, for cool weather, if nothing else, and some rain. But you're right. There's smoke in the air, and it's not good for anything, for business, for our economy, to have all what's going on around us, and we're stuck there. I got to ask you, first of all, it's nice to see you again. The sales, it's just amazing to me. In June, John L. Scott, for example, Guy did $170 million worth of real estate sales in Jackson, Josephine, in Klamath counties. That's a lot. Is lending, my question is lending keeping up with this, or is this people who've already been in the pipeline buying, or what are you seeing in terms of this frenzy that's out there still in buying?
Well, I can tell you, my lending didn't keep up with you. I only did about $5.5 million last month, but yeah, we are still busy. I think that the next phase of things, well, for me personally, right now, it turned into a lot of refinances at the end of last year, which was pretty crazy. I feel like I've been running nonstop for about 3 years now. A couple weeks ago, it started to slow down a little bit on the applications, and now it's slammed again. So yes, we're every bit as busy, and it's amazing. So
okay, since we last talked to you, what have interest rates done? Because I think that's one of the topics that we're certainly having with buyers and even with sellers about what's going to happen to interest rates. We're hearing all sorts of things out there, you know, they're this and that. What have you seen in the last month and that's happening?
Well, I called it a little while ago, and you said you were going to hold me to it, and so here we are. After everybody's been very, very concerned with inflation, again, I'm not, because anyway, there are just some factors kind of behind the scenes. Rates have actually at about a 5-6 month low right now. So a lot of what we lost ever since the election, we're finally getting back. You know, everybody would like for this pandemic and the economy to just everything to go back to normal now. You know, nobody has to look at any masks. Everything's cool. But the reality is that there's been a bunch of revenge buying. I mean, people haven't had to pay their mortgage. They haven't had to pay their rent. They've been getting sent money in the mail, and they've just been out doing whatever they want to do as far as purchasing goes. And some of this stuff is just kind of coming back to roost. You know, on Wednesday, we had some numbers showing that the overall economy in the world isn't as strong as, you know, as they would have liked. So, you know, not only are we not talking about inflation at this point, you're not really hearing that in the news. They might even need to be talking about deflation a little bit. You know, the 10-year treasury being, you know, on Wednesday down around 1.25 is a huge deal for rates. We don't trade exactly on them, but rates are good, and they have definitely come back around in the last week or so after just kind of going up since the election. You know, maybe I got too deep in the weeds as far as the why of the thing, or maybe I didn't go deep enough, but there are just some factors. We're not out of the woods right now as far as the economy goes, and it's going to be a longer road than I think people are trying to make it sound to get back. And consequently, people are going to go into some safer things like, you know, like bonds and treasuries and things like that.
So how do you think it's going to affect real estate here in Southern Oregon over, let's say, the next 12 to 24 months?
Well, I really think that rates are good, and even if they go up some, they're still good. And, you know, the difference in good and really good, you know, there's a slight difference. You know, if you're talking $10-20 a month in your payment, it's not going to crush anybody. So, you know, they will have to go up at some point. I just don't see it happening right this minute. It's going to be pretty volatile, maybe moving a little sideways for a while and then maybe a little up toward the end of the year. But for right now, you know, I had to give somebody a 4% rate the other day, and I felt like I was calling them to tell them that somebody had died in their family, because it was so weird. And then I kind of came back around to, you know, your credit score sucks. You know, it does. And then the lady called me back like 20 minutes later and said, you know, I talked to my mom, and she said when she bought her first house, that's actually she was so excited to have that rate after she just kind of looked at the factors going into it. And if we just, even though we're not looking at, you know, 2.5-2.25% rates like maybe we were at the end of last year, I just locked somebody in on a refi 20 minutes ago at 2.75 on a refinance.
Wow.
You know, so I mean, if all the factors are there and just kind of the stars align, you can get some really, really good rates out there. Yeah, gosh, I shouldn't even have said anything without an APR, but I'll have to look that up before the end of the show here so I don't get into trouble. But anyway, I wasn't charging him points for that rate either, believe it or not. And they're still really, really good. And, you know, I mean, I've been analyzing these a little bit over the last few days, and, you know, losing an eighth or a quarter in rate, if you're talking $20-30 a month, yeah, it does add up over time. And, you know, mentally, everybody wants to, you know, have a certain rate in their head, but they're still historically so good that I don't think it's going to hurt. I don't think it's going to hurt the real estate market at all, at least from our side of things.
And you may be right, because when you look at what's happening in terms of the stats, just like from last week, Guy, nothing has slowed down around our counties. I mean, There were 96 closed sales in Jackson County last week, 26 in Josephine, 25 in Klamath. And the thing is, when you look on the pages of them, they're going so fast. Alice, this is what's so surprising still to me, is that seriously, the vast majority of these sales are occurring within probably 10 days of them going on the market. And many of them within 5 days and 3 days and 4 days. And we're talking prices ranging from anything from 500,000 and below are going off that fast. So, the demand is still there. That has not slowed down at all. And we are seeing more listings. There's no question about that. The listings have increased a little bit, not much, but again, they're going off. They're being scooped up as fast as they're being put on the market. So we're not getting a large increase of them because they're going off fast. So that has not changed. And, here we are in the first part of July, Alice, I don't think that's going to slow down unless, look, we could get smoke again. We could do lots of things that could change that. But right now, things are really being scooped up pretty darn fast, which means you as a buyer had better be ready to go if you're looking at something to purchase or you're going to get left behind.
Yeah, and that is something that we're doing with everybody right now that's coming in and getting pre-qualified. We're doing full credit approvals on them. So, and it's not months out or anything like that. Our underwriting times are the same as our normal ones, 24 to 48 hours. So if you come in and get pre-qualified, you're going to have a stronger letter than somebody that jumped online and just kind of plugged in their information. You're going to have something that's been underwritten by an underwriter, and that letter going out that you're fully credit approved. If they're comparing two offers that are kind of comparable, I know if I was selling a house, that's the one I would take all day long.
Yeah, it makes a difference. And I don't think a lot of buyers understand that option is available from some lenders. And it seems like a subtle difference from the buyer's point of view, but it's a huge difference to the seller, because it means the buyer's not going to get kicked out halfway through the escrow for something they could have discovered early.
No, absolutely. So anyway, it's been making us a little bit busier than normal because, you're literally processing about 3 or 4 times the loans, but we have plenty of people right here locally doing it. So
well, and with the lower rates, even 4% is still, I call that free money in my book. 4%.
Yeah.
I mean, all the way, in my opinion, just up to 6% is still kind of in that free money category. But it also means that people can afford a bigger payment. So I'm curious to see, even with the very gentle interest rate increases over the next year or two, what that does to prices. Although just having more inventory is going to have a softening on the prices, just that alone.
Yeah, and please understand, I'm not locking people in at 4%. This was a one-off, that literally all the factors just kind of lined up in the wrong way.
Well, your credit rating matters, and that's another thing I don't know that people understand. If you have a better credit rating, you get a better interest rate.
It's true, and we actually have some really good tools. I analyze every credit report when we pull them, and actually, when you're in contract isn't the time to analyze those and try to improve somebody's credit. It's before. So the sooner you can get in and get pre-approved, the better. Even if you have a good credit score, and I can make a couple suggestions, and maybe it goes up from there. Every little bit counts. We have different tiers. So at 740, you're basically going to get about the best rate. 720, it's still really good, but it's not going to be quite the 740. So if there's something really simple you can do that we can get 5 or 6 points, get you to that next tier level, you might be paying an eighth lower forever. And with rates where they are, a lot of times people will be in these loans forever.
Well, and quite frankly, you get a house. Let's not lose sight of that. Goal accomplished.
Yeah, I always tell people, I've done a lot of crazy, dumb things with money in my life. And any house that I've ever bought, I have not regretted. I'm sure there's people that did it in 2009 that, might have a little bit, but if they'd have hung on to it, they'd have been fine right now. So overall, it is really the best investment, in my opinion, out there. I try to look at different places to invest things, when you have money, and you should be diversified and have a little bit in the stock market and a little bit here or there. But really, people are always going to need a place to live. And if you can, if you can afford it and the numbers make sense, get into a house, because overall it will go up.
Well, and look what happened just unexpectedly in the last 14 months. I mean, Pete, you saw things go up in Klamath, which, the prices start lower there, but you had a pretty big spike in that county just in the last year or so.
Well, prices have gone up everywhere. I mean, and I think this is still the issue with people as you're looking, because what can you afford? What can your loan be? Because the median price last week in Jackson County, Alice, okay, on those 96 sales was $503,000. We always talk about that $500,000 level, that's kind of the dividing line there, and we're seeing that. I mean, it's remarkable. There's 223 homes of 360 that are priced at $500,000 and above in Jackson County alone. That means there's only 140 homes priced below 500,000, and those are being scooped up pretty darn fast. And I know we got a break coming up. The luxury market is still the most interesting thing. I've talked about this for several months, as you know. They're being sold, they're going pending, and they're still coming on the market. What's going on with the luxury market? Are people just selling out? Are they leaving? Because we have 84 luxury homes in this market in Jackson County. That's 2 more than last week, Alice, and 7 of them went pending this last week.
Yeah. And that does drive up the average prices.
Right. 24 luxury homes in the market in Josephine County. We've never seen that. In 13 years of following this stuff on this show, it's never even been close to that. I don't know what's happening, Guy, what you think, but it's an interesting dynamic of what is going on in our market.
Well, and we'll have a lot to talk about after our break, so do not touch that dial. Guy Giles is here with us, Mutual of Omaha Mortgage. Alice Lima and Pete Belcastro will be right back with the Real Estate Show. Don't touch that dial. Well, welcome back to the Real Estate Show. I'm Alice Lima here with Pete Belcastro. We're both brokers at John L. Scott here in Southern Oregon. And we're speaking with Guy Giles, one of our sponsors. He's with Mutual of Omaha Mortgage. And right before the break, Guy, we were talking a little bit about the interesting phenomena of the luxury market and how there's so many listings, but they are selling.
Yeah, I actually, to answer Pete's question a minute ago, where some of these people are going, I just put one into escrow, about $1 million house this week, that these guys just bought that house while they remodeled their house. So they needed a place to stay while they remodeled. So they bought $1 million house. You got to have a place to hang out while you're having yours done. And now they're selling it. So my people kind of picked it up. But, I'm thinking that it's a lot of people that aren't necessarily moving out of the area, but maybe you had a really nice house and you're realizing that this is the time to sell it for, the best price ever. And then you can downsize or, laterally move or get to the place where you want to be, because you are pulling a ton of money out of that house at this point.
But boy, there's a lot of competition. Pete, you were saying there's over 80 listings in Southern Oregon that are over $1 million.
86, 900,000 and above just in Jackson County.
Oh,
and
just in
guys,
Jackson County.
They are selling, and people are doing them for different reasons. A lot of people buy a lot of people buy luxury homes when you're retiring, and you're at that older age. And I wonder if that's being played into it. But Guy, you were right. Get the prices right now that they're going to get for these homes than they are right now. And even if I look at the stats from Jackson County last week and what sold, some of these properties, $1.2 million, they actually got more than they were asking for on some of these. So,
gosh,
that's pretty unusual though, because that is a buyer's market, that luxury range.
Luxury home, yeah. But we talked about a few weeks ago, Guy, and this is what it used to be: 300,000 to 500,000. It was 250 to 450 was a real popular price, and now because of interest rates low, we're seeing much more activity in the $400,000 to $600,000 range, $500,000. There's tons of properties on the market, and those are selling, a lot of them. And so I'm curious as to what people are paying those. If you have a low interest rate, that may help you do it.
Oh, it makes all the difference in the world. And we actually have some new jumbo Just to clarify, we're Fannie Mae and Freddie Mac allow us to do loans at right around $548,000 in this county. Gosh, I think when I started, it was probably two something was where the where what we call the conforming loan limit was, and anything above that, you either have to have like a second mortgage behind it, which we actually have a couple pretty good programs where we can do that too and keep you out of the jumbo pricing, just meaning something that a bank would portfolio. But we've had a couple of investors come in the last couple of weeks, and I actually locked in a couple of non-conforming or jumbo loans lower than where the actual rate, the regular rates were in the last week. So it's been everybody's kind of adapting toward these higher prices too, and they're realizing that maybe those higher dollar amount ones don't move around quite as much, and the people can actually afford them, and they're starting to get pretty aggressive on the pricing on those again.
Well, and I think the spike that we had in prices just accidentally because of the COVID and the fires in the last 14 months, people have an enormous amount of equity and they can make this move. We have people in all price ranges that are putting their house on the market now, and they may have only owned it for 2 years, but they have an extra $30,000 to $100,000 depending on the down payment, the neighborhood, and the market in their neighborhood. So it's really kind of interesting. You can jump into one of those more expensive properties and still have a comfortable payment because of the interest rate.
Yes,
and the bigger down payment because you have equity.
Well, Alice, you get it right. That's driving the market right now, is that you can afford those payments on $400,000 to $600,000 homes where you couldn't do it before. And you're right. That's exactly what is happening, and people are doing that. My question to Guy also: what about look? I've seen a lot of hemp bean going in, planting. Dallas, have you seen that? There's been a lot of planting going on in the region this last few weeks as we get into July. I don't know where the water is coming from.
Yeah, where's the water coming from?
But Guy, have you heard anybody that you talk to as your buyers and stuff like this, or even they're concerned about rural properties, about water, about that kind of thing, because the price can't be sustained on these rural properties, because we can no longer guarantee, as of this year, we can no longer guarantee people are going to get irrigation water every year like we have done in the past. That has to affect this market somehow in rural properties. Are you seeing anything like that? Are you hearing anything like that at this point, or are we too early to talk about it?
Well, I'm really not, but basically it's because I'm a residential lender, Farm Credit Services or somebody might be dealing with that a little bit more, but unless it's really a hobby farm or just something you're just kind of doing on the side, it's really something that doesn't hit my radar a whole bunch. Because if you're literally into something that's more of an EFU type property, we do loan on those, but the value of the house has to be worth a whole lot more. So if you come in and tell me you're trying to grow hemp, you're probably talking to somebody else to begin with anyway. I think it's all cartel money at this point anyway.
I'm talking about rural properties, 1, 2 acres, 3 acres that people have, that we have sold. How many of them in this region that have irrigation water with them? You have a little pasture, you have some animals, things like that, a garden, whatever. That's what I'm talking about. What are we going to do there? Have you heard anything? Because water's a big thing, and we talk about it as real estate brokers to our clients all the time. Now we can't. We can change this scenario.
Yeah, to answer your question, I guess it hasn't really hit my radar yet, but it is a really good point, and it will it'll definitely affect everything. I took off for Idaho for a week or so not that long ago, and while I was gone, I was reading where the sheriff and everybody was kind of cracking down on a lot of these grows. So I don't even know where all that's heading since I got rid of my TV and everything. I mean, who the heck knows? But I assume it will be a bigger and bigger thing as we go forward. But no, it hasn't really affected anything that any of my people are doing.
Okay.
But
and it affected sales. I mean, you look at them and everything is still selling, so it's still about price. But I think buyers need to know that, and I think sellers who have some of these properties like that, as they do this, we need to have an honest conversation about water in the future here, because
I agree.
dependent upon it. and it's not going to be the supply that we have had in the past. Unfortunately, I hope it does change. I hope we have a great winter because we really need it. Could you imagine if we sit here next summer and we're the same winter that we had in 2021 here next year?
Well, could you
Whoa.
imagine if they just pull out all the dams like they're trying to do also and send a bunch of carnivorous fish down the Klamath to eat all the salmon and steelhead? A lot of what attracts people here won't necessarily be here either, but water is a huge factor. I mean, you go up to the lake and there's really only a couple of lakes you can go hang out at right now too. So I think we're all, praying for a bunch of rain this year.
I was on Upper Klamath Lake actually with a friend of mine, actually a former client who bought a house on Klamath Lake this week, and I'm amazed at how big that lake is. So huge, and the water ranges from 2 feet, Guy, to 7 feet that we were in. But water is so, and I'm one of those people that always talks about that. But buyers and sellers, it's such a big thing when you buy, and because you want it and you want to do things with it. But we have to have our conversations, maybe changing, maybe not this year, but we have to have it in the back of our minds really all the time, especially in dealing with rural properties. Even urban areas are affected a little bit by this. But we've got great water in Klamath Falls and Medford and Grants Pass, domestic water, but it's the rural water that is really the big issue here. And it's going to affect us some way. Anyway, that's my goal on that. I know people are still wanting them. They're still looking at them, and they're still out there, and they're selling.
Well, and I think as a buyer, you just need to be aware that if the water is going to be unpredictable, then you just want to build your lifestyle around that. So,
Yes.
And I think it affects the commercial farmers more because they're income dependent on the water. And so for them to have a secondary water strategy is even more uber important. But for the residential person, I know a lot of people, they're retiring from these big urban areas and they want to have a half acre or an acre garden, or they think they're going to grow enough vegetables to go to the farmer's market. So you just want to plan in case you have an unpredictable water year. What are you going to do? And then if you're selling, I think if you're going to sell during a drought, shouldn't you discount a little bit? What do you think, Pete?
Well, I think if someone comes in and says, look, I've got full TID rights or Medford Water Commission rights or wherever, and there's no water, and everybody can see that. So, again, it's part of the negotiations, but I think honest conversations about the reality of it are really where we need to go. Because pie in the sky thinking, well, next year's going to be fine may not be anymore. And
right, but I wonder if some of the sellers are gonna maybe not put their house on the market if they are on a ditch or have water rights and the water rights are suspended right now. I wonder if they'll wait. I wonder if they'll wait and take their chances to see what happens next year.
AB, and what are you hearing about wells? I mean, I've heard stories of wells going dry again, like they do every year, but more of them and more places. Go out to the Duff treatment plant and see all the people lining up there to get water out of the Medford Water Commission. Never before have we seen lines like that before. So, and we're only July. This is not even mid-July. We still have almost 3 more months of this. And so I think that as we go into the fall, it may have an effect. It may not, Alice. I don't know, but it's certainly out there.
Well, and there's also a lot of wells. There's a lot of new wells being put in. There's a lot, part of a seller's market is raw land starts to become valuable. So there are a lot of new wells going in and they're doing just fine. They may not be getting the gushers they would in a wet year, but a new well just has to have 5 gallons a minute or more to be financeable. So
can you imagine trying to go, say you're buying a place and you're going to go do a inspection on the well or a water test? You were in the middle of a drought and you're going to run your well for 4 hours to do a water test.
Yeah, we talk about that because I love stressing wells during a drought. I think that's a brilliant idea. But yeah.
And buyers are going to freak out. I'll tell you that they're going to freak out if the well runs dry when they're doing the test.
Yeah. So, yeah. Well, better than when you already closed escrow.
That's true.
That's
Yeah.
why I do my side of the job. Then I can just throw the realtor under the bus and say, I don't know why they picked that place for you.
Well, we're not responsible for Mother Nature.
Not at all. I can't
Not
even,
at
I can't even
all.
imagine. I seriously, you guys, that's why you need a good real estate agent. I'm
Yeah.
a firm believer, and yeah, no, you don't have any control over it, but
Okay, so
um,
we've got a break coming up. Guy Giles, Mutual of Omaha Mortgage. We're also brought to you by our local Rogue Valley Association of Realtors and John L. Scott of Southern Oregon. So, Guy, we appreciate your sponsorship every month. Thank you so much for that. Pete Del
thanks.
Castro and Alice Lima will be right back after a word of our sponsors. And you can also have a repeat of this show tomorrow at 6 p.m. So do not touch that dial. We'll be right back. Welcome back to the Real Estate Show, folks. Pete Belcastro, Alice Lima here. We're both brokers at John L. Scott in Southern Oregon. And we're going to chat here with Pete about the market update for this last week. It's been a lot of changes. You know, people are still worried about possible interest rate and inflation, and we're starting to get a little bit more inventory. So how did that affect our statistics this week?
Well, I think that I don't know, what was it, about a month ago or 6 weeks ago, we started seeing the little increase in listings as we had anticipated they would coming into the spring and summer.
Mhm.
County is up to 360. Josephine County has now 169 and Klamath County 141. These are nowhere near still where the normal highs would be for listings. Okay, we're still way down where we were from a year ago. So, but what's happening now is that the sales are happening. Pending sales are going on. Last week, 90 in Jackson County, 96 closed sales here. 503,000 was the median price in Jackson County. That is, that's
Isn't
really
that
a
something?
high figure that most people cannot afford. So we're really seeing the affordability part of this come into play. Gentrification that happens in cities and communities, is it occurring here? Because where are people going? And I've seen people who again, who've left the areas because they
Yeah,
couldn't
there's a
find any
lot of
replacement
that. Yeah.
spot going. We're a really transient community right now. I think people are leaving and new people are coming, and they're coming with different expectations of our communities. And I think it's really going to strain and stress, but there's just no question that things are selling, Alice, and they're selling pretty fast. Josephine County remains the hottest of all three counties. It's amazing. It's amazing, but there's the average is 40 days on the market, and the average price last week was 422,000. So Josephine County is a real popular destination right now. It really so is Jackson. Klamath is still low on inventory. There's just not much out there to buy. And again, I've got clients like you do. Where do we go? Unless I have to sell, I've got a new job, a death, a divorce, whatever. I have to sell. People are kind of rethinking that and saying, well, where am I going to go? I don't want to leave the community that I'm in, but I have no place to go. And that is a big problem, and it's not changed, and I don't think it's going to change. The affordability part continues to perplex me, and how people are doing this with their jobs, and how much money, Alice, do you want to spend on a mortgage payment? That's really what it's going to come down to, isn't it?
Well, and interestingly enough, last year during the shutdown, we saw so many remote technology workers become residents, not only here in Southern Oregon, but in many other suburban or agricultural areas. And that trend is still continuing. In fact, it's continuing so much that it's hitting the national newswire. So we saw it last year, Pete, and we wondered, when you bring all these tech workers and they bring their $100,000 and $200,000 a year jobs with them, how is that going to change our community over time? And then some of our locals during the shutdown, I got a call this week to list 2 houses because they're going back to California because of the COVID. They realized they want to be with their relatives,
With
and
their family.
they made enough money on the house here in Southern Oregon, on both these houses, they've only been here 3 years and they made something like 50,000 on one house and 35,000 on the other. So that's a huge down payment. Now they can afford to go back to California, but it's really very interesting how everybody is moving. Everybody's going somewhere and they're doing it this year.
Right. And one of the things, as you mentioned, there are family compounds or family groups coming in together to purchase one or two places or even three, if they can get them all, units together. Families wanting to be together, I think, is the coolest thing around that's going on, maybe in real estate, because families are important.
And it's more affordable. It's shockingly more affordable for a family to live together, relatives to live together.
Right. Do it together, and yes, that's
each other.
And that's a really popular too.
Yeah, and so my relatives are in this boat, and we're looking for my mom, who needs 24-hour care now, and she's decided not to go to assisted living. So there's a group of us that are going to try to take care of her. And I'm not being personal. I'm just saying this is a super common scenario. So if you do have kind of a compound to sell, call me, because my mother's estate will be purchasing something.
Well,
but that nobody wants to live under the same roof. They want multiple roofs so that, this person can be there and my mom can be here and her caretaker can be there. So it ends up being 2 or 3 buildings on one lot.
You're talking about your family. My sister, we're doing the same thing with her. She's got a house she sold a rental house that she had, and we're buying a house next door to her so she can have one of her children.
Oh, I did not know that. Now, see, that is another really good solution, is to buy within a few houses of each other.
Right. She's doing to have maybe 3 of them, her own, and then 2 others for the family to be very close to.
So how did that happen? Did the house just come on the market, or did you guys go approach the neighbor?
We're approaching the neighbor, actually, because the house is fake and they haven't done it. Yeah. So, but those are the kinds of ideas that are out there that you can do that bring families together. And like I say, we do see a lot of that. People do talk about that a lot. The last thing before we go is vacant land. I've never had, in 13 years of doing this, so much inquiry about vacant land, because, as you said earlier, you can't build a house. It's too expensive to do it. But if I buy the land now, I can, over the years, put a well in if I want. I can do this, I can do that. I can go there and just recreate if I want. But the interest in bare land is really intensifying that I've seen in my experience. I don't know about you.
Yeah. In fact, I'm getting calls to list vacant land now. People feel like we're at the top of the market. And I tend to agree, because by the time vacant land starts getting the prices going up and it's getting multiple offers and it's in high demand, I still believe personally that is an indicator of top of the market, or the top, or just past the top, and that we're going to start to see prices soften as more inventory comes on, and then raw land and luxury will both become more of a buyer's market. But we'll have to see if I'm right.
Well, you're probably pretty close to that, to being right. So yeah, the land people are trying to come up with different solutions for their things, and being smart. But right now, raw land is very popular, and a lot of people are looking acreages that are out there. Some of them are really pretty bad and not very good. You can't build on, things like that. But you can buy a piece of land and just use it for recreation only.
Oh, and that's a fun thing to do, because then you can go camping without a reservation.
Right. I can bring my RV out there. I can bring my ATVs. If I've got 5 acres, 10 acres, whatever, because you can come to some of these rural counties, you can get 25, 30 acres, for $20,000, so they're out there. And I think that's one of the big things I've seen is the land, just bare land, vacant land. It's become a really
if you are going to buy that, Pete and I still recommend you try to get one with a well already on it.
Yes.
But if not, then you can drill one later, right?
And there's not very many of those properties with wells on them. There's not many with septics on them, and very few honestly have even power near them. So, but the land itself is pretty nice, and that's what people are. That solace. I could have my own place to go. It's cheaper than going out and paying $30, $40 a night for a campground or whatever. So,
well, then you don't have to listen to somebody else's dog bark. You can just listen to your own. So, okay, folks. Well, we're running out of time. Pete, Bill Castro, Alice Lima, thank you for sharing this hour with us. We'll be back again next week. Have a beautiful Southern Oregon weekend. Bye now.